talk about history of SMW Malaysia. SMW Berhad, founded in 1910 in Melaka by William Sam and Henry W, began as a rubber plantation company during Malaysia colonial era. Over the decade, it expanded into palm oil cultivation, becoming a key player in Malaysia agricultural sector. In 1974, SMW merged with Guthrie and Golden Hope, forming one of the Southeast Asia's largest conglomerate, diversifying into industry like property, automotive, and industrial equipment. In 2017, it's restructured into three entities: SMW Berhad, SMW Plantation Berhad, and SMW Property Berhad. Today, it is a global leader in sustainable palm oil production and a major contributor to Malaysia's economic growth. Next, brief profile of SMW Berhad. Since its inception in 1910, SMW Berhad has grown into a formidable global powerhouse, proudly securing its place as one of Malaysia's largest multinationals listed on the Bursa Malaysia Stock Exchange. Today, SMW is a partner of choice for some of the world's most admired brands in the industrial and motor sector. With operation in 17 countries and territories across Asia Pacific, SMW continues to grow, delivering sustainable value to their stakeholders through operational excellence, high performance standards, and good corporate governance. Next, SMW mission, vision, purpose, and core value. Their first mission is SMW are committed to developing a winning portfolio of sustainable businesses. Next, SMW subscribe to good corporate governance and high ethical values. And the next mission is SMW continuously strive to deliver superior financial return through operational excellence and high performance standard. The last mission is SMW provide an environment for their people to realize their full potential. Their vision is to be the leading motors and industrial player in Asia Pacific. SMW purpose is to bring the best product and solution to enable Asia Pacific to move and develop. SMW core value: act with integrity, care for all, and win together. That's all for me. Thank you.
I will continue to explain the corporate governance of SMW Berhad. We'll start with the board of directors. The first point is board composition and shareholding. SMW Berhad's board of directors includes both external non-executive director, that is independent and non-independent, and one internal executive director, that is Datuk Jeffrey Salim Davidson, the group CEO. Institutional investors such as EPF and Permodalan Nasional Berhad PNB own a 40.8% and 44.2% of the company share, respectively, while the board collective owns less than 1%. Then SMW is listed on Bursa Malaysia with a single class of common share that carry equal voting right. The second point is expertise and leadership. The board member bring expertise in public administration, corporate governance, and international policy, with a notable figure like independent director Scott William Cameron and non-executive chairman Tan Sri Samsudin Osman. The last point is strategic management and sustainability. The board actively participates in strategic management, ensuring decisions align with the company's financial and sustainability goals. Through the Risk Management and Sustainability Committee (RMSC), the board evaluates and monitors social, environmental, and governance issues to maintain a balance between ecological and economic objectives. For the top management, the first point is the composition and expertise of top management. Some Davi's top management, led by the Dato' Jeffrey Salim Davidson since 2017, include a skilled individual like Muhammad Noor Abdul Aziz, Group of CFO, Roslaini Faiz, Group HR Officer, and Danny Raharjo, Group IT and Digital Officer. The team combined global expertise such as Dato' Jeffrey and Danny Raharjo, international experience with a mix of long-serving member and new recruit to balance creativity and consistency. The second point is a focus on sustainability and strategic management. Top management emphasize sustainability through initiatives like the Sustainability Blueprint and the 5-year Strategy Master Plan. Then the Risk Management and Sustainability Committee aligns business objectives with the sustainability goals, ensuring social and environmental issues are addressed. The third point is a teamwork, training, and ethical decision making. The leadership foster a collaboration across all levels, enhance employee skill through training programs, and promote ethical and socially responsible decision making. Although the top executive do not hold significant equity in the company, their systematic approach ensure a strong readiness to manage future challenge.
My name is Siti Mashta, and today I will provide an overview of the key external factors influencing SIM Darby Berhad, focusing on opportunities and threats impacting its strategic operations. SIM Darby has several opportunities to drive growth. The rising adoption of electric vehicle EVs creates significant potential supported by the company's partnership with leading EV brands and investment in charging infrastructure. Southeast Asia growing middle-income population present a chance to expand the market for premium products and services. Additionally, the healthcare sector expansion and increasing demand for renewable energy align with SIM Darby's sustainability goals, offering long-term benefits. However, the corporation faces notable challenges. Supply chain disruption continue to impact inventory and operations, particularly in motors and industrial sector. Economic slowdowns in key markets like China pose risk to revenue growth, while intense competition within the automotive and industrial industries pressure market share. Furthermore, stricter ESG regulations and rising compliance costs create operational hurdles, requiring strategic alignment with global sustainability trends. In conclusion, by capitalizing on opportunities like EV adoption, market expansion, and sustainability initiatives while mitigating risks associated with economic uncertainty and regulatory challenges, SIM Darby is well positioned to navigate its competitive landscape and achieve sustainable growth. Thank you. Now I will pass to Shuri.
Thank you, Mashi. So let's continue with the SIM Darby strength. As you can see in the table, the total wear score of strength is 3.00 and its total wear is 0.65. First, SIM Darby strength is its partnership with premier brands like BMW and also the Caterpillar, which give it a competitive edge, driving its demand and also the market rush. Second is financial stability. It enables reinvestment into the core operation and also the long-term initiative. Furthermore, SIM Darby's commitment to sustainability aligns with global ESG trends, further strengthening its reputation. A diverse portfolio across motors, industrial, and logistics sectors mitigates the risk, while the robust operation and logistics system can ensure its efficiency even during global disruption. The motors and industrial division are the key revenue drivers, supported by expertise in digital innovation and IT systems. Finally, the company places a strong emphasis on human capital development, equipping its employees with the skills and also the leadership capabilities needed for the global business success. Now, let's look at the company weakness. The SIM Darby IFAS table shows the total IFAS is 4.10, where its weakness where is 0.25 and weakness credit score is 1.10. A significant challenge is SIM Darby high dependency on the China market, making it vulnerable to the regional economic downturns and also the regulatory changes. The company's limited EV portfolio highlights its slow progress in the fast-growing zero-emission transformation market. While the supply chain vulnerabilities, like semiconductor shortage, will disrupt its production timelines, SIM Darby also faces high initial costs for the sustainability measure, which strain short-term financial resources. Additionally, the over-reliance of core premium brands and weak diversification in EV and also the renewable energy sector hinders its ability to capture the emerging market's opportunity. In conclusion, these weaknesses underscore areas requiring its strategic focus for improvement.
Govin, Medicine Semester 21240267. I will be presenting about Strategic Factor Analysis Summary or SFAS. Let's begin with an overview of SFAS. The SFAS table combines two key components, the Internal Factor Analysis Summary IFAS and External Factor Analysis Summary EFAS. It's assigned weighted score to strengths, weaknesses, opportunities, and threats, helping prioritize strategical factors and providing a clear roadmap for organizational decision. Now, let's look at the strength. Strengths are internal advantages that help an organization gain a competitive edge and drive growth. For example, a strong financial position like having a low debt to equity ratio of 200% and a robust cash flow of RM 2.78 billion offers stability and resistance to economic shocks. technology, and efficient operational process to further solidify the organization position. While strengths are crucial, it is equally important to address weaknesses as well. Weaknesses represent internal limitations that hinder the performance and competitiveness. Depends on the Chinese market exposures and company the economic and regulatory risk. Additionally, supply chain vulnerabilities such as semiconductor shortages increases cost and reduce efficiency. Lastly, limited the diversification in the EV sector. One of the key opportunity is the rapid growth of electrical vehicle market, which opens doors for partnership with innovative firms like BED and Bosch. On the other hand, are external risks that could impact stability and profitability. First, economic volatility such as global recession and inflation reduces consumer spending and industrial investment. Then, intense competition, particularly in EV and industrial equipment sectors, necessitates continuous innovation and cost management. Next, regulatory risk, including stricter environmental laws, increase compliance costs and require operation. Now, let's continue with TWAS analysis metric. The TWAS matrix is built on SWOT framework by focusing on strategy development. It aligns internal factors such as strength and weakness and external condition, opportunities and threats. First, we have strength opportunities or SO strategies. The company's strong financial stability, including a low debt equity ratio and robust cash flow, can be used to invest in a partnership with the leading EV companies like BOD and Porsche. Additionally, premium brand collaboration with BMW, Rolls-Royce, and Caterpillar provide a competitive edge in entering the growing healthcare market in Southeast Asia. Next, let's look at the weakness opportunities or WO strategies. Reducing over dependence on the Chinese market by exploring new partnerships and diversifying into emerging EV and healthcare markets, and addressing supply chain vulnerabilities by investing in diverse procurement channels to support growth in high demand sectors like electric vehicles. Moving on, strength threats or S3 strategies use internal strength to counteract external threats such as technology and strong operational process can help the company manage regulatory compliance more efficiently, particularly with the stricter environmental law. Then, the financial stability acts as a buffer against economic volatility and inflation, providing the resources needed to adapt to changing market conditions. Finally, we have weakness threats or WTO strategies. Developing alternative markets to reduce reliance on cyclical industry like coal mining or heavy dependence on the Chinese market, and investing in renewable energy technologies to address sustainability concerns and mitigate exposure to regulatory risk. Thank you.
SMP implementation focus on three main goals: improving digital customer engagement, expanding into certain ASEAN market, and developing EV infrastructure. The strategy is divided into two phases: testing and piloting from 2024 to 2026, followed by scaling operation from 2027 to 2030. Financial facility will prioritize high ROI projects with green financing and budget reviews to ensure alignment with financial goals overseen by the finance department. To ensure consistency across regions, standard operating procedure will integrate ESG compliance and be finalized by the Risk and Compliance team by Q4 2025. For evaluation, SMP will implement real-time feedback mechanism using dashboard to track key KPIs like market share and EV adoption rates. This system, led by IT and digital transformation teams, will be fully functional by Q2 2025. Performance will be benchmarked against industry standard through biannual assessment conducted by the market research and strategy teams. This approach ensures alignment with market trend and identifies improvement areas. Last but not least, SMP will establish SMART goals such as reducing carbon emissions by 30% by 2030 with annual reviews to monitor progress. A reward system will incentivize employees, linking performance bonus to ESG compliance and operational excellence managed by HR. To mitigate risk, scenario planning and semi-annual reviews will address potential disruptions, led by risk management team. Finally, quarterly strategic reviews will ensure alignment with overall goals, supported by stakeholder feedback and ESG audits with oversight from the leadership teams.
In conclusion, SMP Berhad has shown resilient and strategic competence in managing a competitive and changing marketplace. Its extensive portfolio strategic growth, such as the acquisition of UMW Holdings and emphasis on sustainability, highlight its ability as a leader in industrial and automotive sector. In FY 2023, the company's net profit increased by 32.2%, indicating strong financial performance. There are still issues, however, the need of diversifying its EV portfolio, supply chains problem, and dependence on the Chinese market. SMP is a position for the long-term success while resolving these issues and generate value for stakeholders by placing an emphasis on innovation, operational excellence, ESG principle, and strategic partnership globally.